Hi, and welcome to the May 11th Ampleforth office hours. Let's dig right into this week's agenda. So first and foremost, want to welcome the Elastic Swap team. We're going to be featuring an AMA session later with Dan and Loki from their group. For those of you who are not familiar, it's an AMM that just recently launched. Really happy to see the early excitement and growth around the project, and a shameless plug to join their Discord. It's your hub for all things tick and Elastic Swap. And really a lot of common interests and crossover that's going to help grow this ecosystem as well as theirs. One other update before we jump into broader discussion here is regarding these office hours. We've touched on this before, but in the spirit of being a decentralized community, we want to make sure that every meeting is not always run by the core team, and that the agenda is not set by the same group every week. To that end, we want to open up the process of running these office hours. We are happy to provide support on deck, design, presentation, anything that's helpful, but we want to make sure that more voices are being elevated and heard. If you do want to volunteer, let us know on Discord, or feel free to email Simon or myself. Our emails are listed in the deck that's been posted. One final topic to briefly touch on before we shift gears and open up the floor is this tweet from Evan that has been getting a lot of attention. It's obviously been a challenging week for many. There's a lot happening in the industry, but when we talk about durability and what that means for Ample, I think this chart really says it all. This is Ample's performance since it was launched in 2019, and really shows the power of rebasing and what is possible even through extreme market conditions. So really happy to see that, and definitely a good proof point for Ampleforth to share with others who might be newer to this project. And with that, Simon, we'll turn it over to you, and we can open it up to the floor.
If you guys have any questions, go ahead and fire them away. If you want to take a voice question, just raise your hand and you can take the stage. Those will take priority over anything text-based. We'll have the Elastic Swap team, a few members, stand up and have a chat with us. I want to talk about that launch. It's extremely exciting. We are thrilled to be a launch partner. Would love to get it from their perspective, and maybe we can just talk about it. If there's no questions there, I'm sure there will be, but happy to give the perspective from both sides, especially because elasticity, which is a lot different than a rigid structure, doesn't exactly break, and they're building infrastructure to support that space. And on a day like today, I think it's pretty important to understand how infrastructure like that can help crypto on a whole. And so let's go ahead and kick it off then.
Simon, real quick, I just want to make a minor correction. I don't know if it was the audio that was playing during Matt's presentation, but I think what he means to say is Ample has been durable. It has achieved that by kind of not being an algo stable, right? By instead kind of translating the volatility of demand from price to supply. That's what allows it to kind of restore its target without intervention, even in the face of extreme volatility. And I don't want this to be taken as an endorsement for algo stables, which we are not. That's a really different thing. Ample's a unit of account.
That's right. I may have overlooked that when Matt was speaking there, but a nice correction, I think, an important one. Loki and Dan, if you guys want to stand up, if you raise your hand, you can join us on stage. I think that'd be cool to start to chat. All right, Loki, Dan, how are you guys?
Hey, everybody, real good, Simon.
Yeah, us too. One of my favorite sayings in the world is no matter what happens, if the tide's with you or against you, you just keep going and keep building. And thrilled to have you guys here because you guys seem to really embody that as well. But it doesn't matter really what the market's doing. You guys worked at hyper speed, not only to get live on Avalanche, but then to get live on mainnet. And here we are. I think you hit everything on the timeline by date and you exceeded most things. And here we are live on mainnet. We have a huge staking pool and a huge pool as well. And we're really thankful for that as the Ample community. So yeah, a good day on that front for sure.
Yeah, we're very happy to provide it. I mean, I think, you already nodded to this in your intro, but we feel as though none of these kind of protocols or these approaches, whether it's an algo stable or a unit of account, are fundamentally good or bad. It matters a lot how you choose to implement them and how you choose to use them. And so one of the things that kind of inspired us was this opportunity to provide a whole set of functionality and support to this class of really approach more than specific tokens or protocols called elasticity. And so that's what we're really happy to do. And we were inspired by you guys. And so it was incredibly thrilling when you reached out and said you wanted to be part of the launch for us. So, thank you for all of the acknowledgement of how quickly we've moved. And I want to also throw some of that back at you with, how great you guys were about getting that initial liquidity and saving us the time of really having to hunt for the launch partners, and the initial liquidity really helped out our momentum.
Yeah, definitely. It is refreshing, I think, to see that take place and to have this infrastructure. It's infrastructure we've talked about for a long time and never had it. Another thing that I like to comment on usually is that there's so much that can be built and done in crypto. And I think that Ample has proven to be a really unique asset, which offers one of a kind performance characteristics. And the world hasn't really shown the infrastructure to keep up with some of the sophistication of these assets. And you can look at other elastic assets like A tokens and others that they don't have a native platform where they can go and unlock everything that's available to them. So you guys kind of being first in that space is really helpful to the entire, like you said, the broad class of elastic assets.
Exactly, and we really want to be agnostic in a way to what chain we're on, what project we're working with. Obviously, we only highlight and vet projects that we feel are legitimate and have a future to them. But we really do want to promote that decentralization as a whole. And part of promoting decentralization is you really have to provide the infrastructure and the building blocks for all types of approaches.
For sure. Brandon, if you had something, I think we get into questions there as well, unless you had.
Sure, real quick. So first, just thanks, Dan and Loki, for joining. We've been talking with you for a while, but it's great to have you here in front of the rest of the community. I think there's one thing that might be worth going into also, and that's, all of us, we probably live and breathe this every day. There's probably some people on the call who aren't as familiar with some of the value propositions that Elastic Swap brings to the table as a platform. So maybe you could do a quick dive on that.
Sure. So, one of the things that we really looked at is how do we provide the ability for Elastic Supply tokens to just sort of natively work with an automated market maker platform. So what many of you may not know is that right now, if you want to have a rebasing event or an elasticity event, work with something like Balancer or SushiSwap or Uniswap v2, you have to call a function on each pool that's deployed after that event, or ideally atomically when that event happens. And that really creates a lot of friction for projects who want to develop, because they need to make sure that they're specifically including code into their Solidity to support all of the AMMs that they're going to deploy on. And it makes it really difficult to kind of make design decisions around whether or not you're going to be, for instance, upgradable or not upgradable. Now you have to look at all sorts of considerations that don't have to do with your own platform, and factor in what people may deploy in terms of other building blocks in the future that you're going to have to specifically integrate into. A really good example of this is there is a stablecoin that rebases, and it's got a pretty large market cap, but what they wound up doing was disabling rebasing whenever that coin is in a smart contract, because they wanted to make sure that they wouldn't break AMMs and other DeFi protocols. And that's a really big trade-off, and their community has been supportive, and they augment it with rewards and things like that. But we'd really prefer if that trade-off not need to be made. So what we've done is made sure that our core product, and we will make sure that this is true of future products, work kind of natively with rebasing, regardless of when that rebasing happens, how quickly it happens, any other dynamics that the protocol wants to implement will not impact the market depth or functionality of their pool in ElasticSwap. So the way that we do that is we kind of treat the internal balance that's being used to determine what the price of the token is, and the actual balance that the contract has in it as separate. And we allow people to come in and sort of address any imbalance that exists as a result of a rebase whenever they add liquidity. Typically what would happen inside of a, say, SushiSwap pool is, or inside of UDP2 on Ethereum, is when there's a rebasing event, there's a call, and the calculation of what the spot price of that token, AMPL, for instance, is, gets recalculated based on the balance of tokens that exist in the contract. With ElasticSwap, that price doesn't get recalculated. The extra tokens that are created just get put off to the side until someone comes back in. And that has a bunch of different advantages beyond just the technical implementation. The advantage to liquidity providers is that they don't get, they're subject to much smaller impermanent loss as a result of these rebasing events. So if you think about having 100,000 tokens that are worth $100,000, and then all of a sudden you have 110,000 tokens that are worth $90,000, you might have roughly the same amount of tokens, but as people start to trade, the shift in how many tokens are available, how many tokens they're getting, and kind of what the impermanent loss dynamics are pretty significant. And as opposed to if you don't have that scenario where the price changes. If the price never changes, as people come in and they trade, they don't really care about the rebasing event. They're always trading relative to what the price is at this moment in time, and they're not throwing the liquidity of the providers askew by making them kind of make up the difference between the non-rebasing token and the rebasing token. And I'm sorry if that sounds a little unclear. It's kind of hard to talk about this without specific numbers. We've got a bunch of different examples in our documentation at docs.elasticSwap.org. But it really is kind of a benefit to anyone who wants to provide liquidity and pair another token with AMPL or a similar token of that nature.
Yeah, I think a really great feature for AMPL holders specifically is that, so normally one of the biggest weaknesses of AMMs is what we talked about being impermanent loss. So when the relative value of one side changes relative to the other, and as a liquidity provider, you can suffer some impermanent loss. With these, natively elastic pools, if you're an LP for AMPL versus USDC, if the market cap for AMPL went up 10x or down 10x, you're shielded from all that impermanent loss. You're only exposed to the impermanent loss of AMPL around the price target, which is much, much lower. And that's not impermanent loss that is necessarily added from the rebasing token. That's impermanent loss that would exist with any floating price token. But it's a way for us to factor a lot of that out. So that's a feature that like a rebasing token on a rebasing AMM can provide that you wouldn't get on something like a Uniswap or a SushiSwap.
Exactly.
Yeah, that's how it's existed. Go ahead, Dan.
I just wanted to make a quick note. Someone just pinged me pretending to be a Simon, and they are in the Ampleforth server. So if you get a DM from Simon, it may not be him right at this exact moment in time. So Simon, you were saying?
Yeah, it was certainly not me. I'm pretty focused on our current conversation. I was going to say that that's the way that these pools have existed to date. So, you know, we've tried to do and develop what we could, but obviously you guys have the talent and went forward with this AMM for all elastic tokens. What do you guys see as the future now that you've mitigated impermanent loss on the supply changes, which is for Ample, that's every 24 hours. For other rebasing tokens, it could be much more or more infrequent. So looking at the landscape, how do you see it? What's the plan, or what's the hope for Elastic Swap on that front?
Sure. So Dan Robinson had a tweet a couple of days ago, which I thought was really good. He made the case that new AMMs probably aren't going to focus so much on the yield curve, which is and efficiencies there, which is what they have been focusing on. We kind of agree with that. He's making the case that efficiency and fees are going to be more important as new products come out. And so for us, we don't really want to worry about innovating dramatically in terms of the AMM or the DeFi core protocols and building blocks. We're really focused on taking those core building blocks that already work, if you're not an elastic supply token, and making them work as an elastic supply token. So one of the things we've talked about is deploying something similar to a curved pool, which works a lot better for stable coins. And I know we've talked a bit about what that could mean for spot, and we're very excited to see that project come out and be part of the ecosystem as well. We've talked with the Buttonwood crew about some of the efficiencies that could be provided there, and I think we're going to be looking mostly at what chains and what products do elastic supply token projects need and not have access to right at this moment, and that's going to define a lot of how we move forward.
That's awesome. You mentioned, but sorry, go ahead, Loki.
Yeah, if I could also just add here, hey everybody, great to be here. Obviously the next couple of months, a big focus of ours is also going to be attending conferences, and sort of helping to sort of cultivate, sort of creative thinking with projects that are still in sort of the creative phase. And so, one of the areas that we really intend to be focused on at conferences over the next couple of months is going to be hackathons where, we can get to meet, up and coming, big brains who haven't fully thought through their protocols, thought through their tokenomics, and perhaps would have traditionally shied away from looking at elastic supply as a dynamic that they might incorporate into their token models. Given some of the efficiencies that Elastic Swap has brought to bear in the ecosystem.
Nice. We had a question on I think we flow into those unless you guys have anything else to add, and we can always come back to it. But you did mention Buttonwood, who's a project that we know well. And Carpe Diem asked, will Elastic Swap adopt BTC and Button ETH contracts? I think by making a rebasing version of BTC and ETH, it can minimize IL, our impermanent loss. That's for you guys.
Yeah, so that's certainly something that we could support today. Our contracts right at the moment only support having an elastic supply token on one side. So we could certainly pair like a Button ETH contract against a stable coin. So you could think of a spot Button BTC or spot Button ETH as a pair that would work well in our existing contracts. I think later we're going to be looking at, among other things, being able to support that kind of elastic supply contract on both sides of the pool. And that's where I think a lot of these types of unit of account button contracts around other assets pairing against each other could get really interesting, because then all of a sudden it's the liquidity providers who are adding liquidity who are actually balancing out the imbalance of the price between these two contracts, and not necessarily the traders. So we're going to look at that very closely. And as people have ideas, especially members of this community who have been probably thinking about this even longer than we have, we'd love for you to come in and have a chat with us, either in our Discord or ping us here in Ampleforth's Discord. And we would love to talk about creative ways to utilize those contracts.
That's really nice. We've seen some really good contributions from the community at large and from hackathons. So we'll be keeping an eye on what you do there and probably try to join you in some places where it makes sense. I'm going to take a peek at questions here, but until we get those, there's probably a lot more that we can talk about with Elastic Swap. We talked about Brandon asked the question about, okay, so why have it? And that's obviously to mitigate, one of the main reasons is to mitigate the impermanent loss from supply caused rebases. But the other question might be, what can we do with Elastic Swap today? Or what are some of the exciting developments? Or what are some of the things that are coming or available today that are attractive to folks? And it'd be best if you answered it. But from what I'm seeing, obviously staking is live. You're live on Avalanche and you're also live on Ethereum. The pools are pretty large. We can get into those details, but if you wanted to take a swing at that, it'd be good to chat about.
Yeah, so staking is a really important concept for us because, you know, we've obviously watched a lot of different staking protocols. I mean, we're all aware of what providing very consistent or large APRs can do based on the things that are going on in the world today. But we think that there's ways that can be innovated upon, and so, you know, we're not out there just to provide better products for elastic supply tokens. We also want to play with some of these concepts. Our staking pools looked at all of the things that are being done in some of the most popular staking pools. The Sushi Swap Master Chef contract, which mints sushi as people provide liquidity to pools that the Sushi Swap community wants to support. The V token contracts, which, you know, provide more tokens to you the longer you lock and the longer you say you're going to be part of the ecosystem or contribute to the ecosystem, and some of the innovations around protocol and liquidity that Olympus helped to hone and pioneer at the end of last year. And we thought maybe we could put all of those together in a way that would be a little bit more effective in terms of aligning incentives. So for us, what we want to be able to do is provide very large, DeFi juicy APRs to people who want to provide liquidity on our platform. But we want to make sure that that's not at the expense of the platform or at the expense of our token. So what we've done is create a set of contracts where you earn what's called unrealized tick. So our tick is our native token, and you're getting rewarded in that token, but you don't have the ability to actually withdraw those rewards until the protocol generates fees. So what happens when the protocol generates fees is we take all of those fees, we convert them to USDC, we put them into the staking contract, and that creates liquidity tokens, which are tick and USDC. And that's the token that everybody gets to claim. So as you guys are going and you're providing liquidity in the AMPL USDC pool or the AMPL tick pool, or any other pools that we wind up creating in the future, you are getting rewarded, but you're getting rewarded for sticking around until there's activity in Elastic Swap, which benefits Ampleforth and benefits Elastic Swap. If you decide to leave before that activity happens, we don't want to lock you in or punish you for that. What we say is no problem. You can take out your original tokens that you staked. You can do whatever you want with them. And then all of the unrealized rewards that you've earned get reallocated to the DAO, Elastic Swap's DAO, that is. And Elastic Swap then becomes an owner of protocol owned liquidity. So as those rewards get minted in the future, they get minted to the DAO if you've abandoned them. And so we've actually seen a pretty robust a showing of people who want to stake and remain in it for the long haul. I think people are really happy that they have a nice, stable yield earning staking opportunity in today's market. And what's great is you don't really need to own our token in order to stake. And you don't need to keep our token later once you receive it, because at the point that we've generated these fees and the protocol has gotten stronger, the market's gotten deeper, then we also have the liquidity for you to go ahead and sell some or all of that liquidity or just restake it. So that's one example of something that can be unlocked once we start to provide building blocks for different elastic supply tokens. It's these sort of juicy APYs that you're used to getting maybe in other projects, and you're only used to getting them for a short period of time. But here we can provide them for elastic supply projects as well, and we can provide them for a much longer period of time because they're tied to the success of the protocol.
Very cool. You guys are really strategic and well-reasoned in thinking about how staking works and how you'd like it to operate. You guys also made what seems to be a strategic choice to pair your tick with USDC. And you have a few pools. You have the USDC tick pools, and you have a few others for staking, whether that be Foxy and Ample. Do you want to chat for a minute about why you decided to pair with USDC instead of AVAX or ETH?
Sure. So I mentioned earlier that we're not really interested in making a strong statement on what protocols or networks are good or bad for crypto as a whole. Along with that, we don't think that tying the price of our token to any one protocol or network makes a lot of sense. So the one exception to that is we did create a tick Ample pool because Ample is relatively stable in terms of price. But our choice to pair against USDC as opposed to AVAX at the beginning was really based around the idea that when people start to panic and there's a market move, they do things that are maybe not best for the projects that they're investing in or they're part of, and they start to do things that maybe aren't even for themselves kind of the best long-term strategy. And so we didn't want our pool either on the upswing or the downswing to show a price change based on just the market conditions external to ElasticSwap. We really wanted to make sure that when there's price movement inside of Tick, it's a result of something that's going on with ElasticSwap itself. And the only way to really accomplish that was to pair against a stable.
Yeah, that makes sense. Well, cool. I didn't see too many more questions left. If you guys had anything else that you wanted to talk about, I think that would be good. I think we could definitely, I feel that people, if they want to learn more, they should definitely go to your Discord. It's been a fun Discord to be a part of. Definitely check out the website, especially due to the staking, which is live now. What else would you want people to see or check out on the ElasticSwap front?
So I'll actually turn it around. What I really want to know is what people think and what they want to see. And in particular, I'm interested in people who maybe they have a really good idea and they are, they have some of the skills to start to try to accomplish it, but there's fundamental pieces that are missing, or there's connections that they don't have that they need made for them. Those are the types of people that I really want to talk with at this stage of the project, because ElasticSwap is here first and foremost to provide building blocks to other builders who need them. And so, anyone from the Ample community who has a creative use for Ample and maybe they want to bring it up with us and they think that we might be able to help with that. That's something we're really interested in. Anyone who has a really creative or a way to use Spot or a concern around Spot, that's something we're interested in. certainly anyone who has a project that they think is really neat as well, that they've seen that has nothing to do with Ampleforth or Elastic Swap. Maybe it's not even Elastic Supply project, but it's got a really interesting dynamic to it that's kind of unique, that we want to hear about and we want to talk to them about as well, because we're, at the end of the day, we're builders. We started doing this because we had another project last year, Elastic DAO, that had a rebase that was very aggressive and broke all the things we tried to integrate with. And we really just needed to come back to the basics and build those core, those kind of core protocols and building blocks. But we have no illusions that we know what all of those are, what the right ones are. We know you guys do. And so we definitely want to hear from you on that front.
Cool. Yeah, for sure. Raise your hands now or throw a message in the text channel and we'll surface it. And if not, I think following up with you guys in your Discord, you guys have been nothing but welcoming over there. So I think that's a good way to go about it. We've had a couple questions. You guys should stay up here and maybe you take the first crack at it. For sure, ask away anyone on anything Elastic Swap, anything Ample. And the big topic right now is the market. So there's been a bunch of questions on that front. I don't know if Loki or Dan, if you guys had any comments, but scrolling through the questions here, people are just curious about, just in general, some spicy comments about UST, or people are interested in talking about the current mood on stables and hearing more about spot progress. That part would fall to us. But do you guys have any takeaways in the meantime here?
Well, I'll just kind of throw out there that, I've been in this space since 2015, and I've lost count of the number of times that people have been concerned about the IRS or the SEC or, whatever government agency coming in and smacking down the entire market. Certainly, there was a lot of talk about DAI and when Maker was first coming out about how that would be something that wouldn't be allowed. And believe it or not, I even got introduced to Bitcoin in 2011 and did not use the $10,000 worth of server equipment to mine it, because I was pretty sure myself that the government was going to come in and arrest everyone involved. So, my current view is to take appropriate precautions to protect yourself and not actively flaunt rules that exist. But for us to stop our innovation because we're worried about, for instance, the impending stablecoin smackdown coming from the SEC, I don't think is something that makes a lot of sense to react to until there's clarity on what that's going to look like. And even when that clarity comes, it's probably going to come in the form of the largest projects in the space being targeted. And an Elastic Swap or an Ampleforth is never going to be the most interesting target when you have Uniswaps and Terras out there.
Yeah, got you there.
Loki usually has some interesting thoughts on regulation in the markets as well.
Yeah, I would just throw in there, for those that don't know, I have a pretty extensive 15-year background in traditional finance, advising hedge funds on regulatory risks. These things generally take incredibly long. Even when from the time you get a proposed rule, let alone a draft rule, you're talking 18 to 24 months before you're getting to a final rule. And if we learned anything from 2016, you get a change in administration to a Donald Trump, and all of a sudden regulation is out the window. So, the political situation in the U.S. and sort of globally around crypto is always going to sort of remain fluid, and will always sort of be a fly in the ointment here and there. But I think at the end of the day, innovation is something that every government wants to be able to sort of hang their hat on. And so, tough talk is easy, but actually sort of coming up with, a regulatory framework that works is pretty complicated. And then I think the other thing that's just worth throwing out there is, politicians in general don't tend to be monolithic when it comes to sort of how they implement policy. And so as a result, while the sort of the view might be that Democrats are sort of pro-regulation and Republicans are anti-regulation, there certainly are Democrats that are supportive of innovation in the crypto space, and have, big companies that are innovating, that are paying them to be in office, essentially. So, I think, again, at the end of the day, people, in markets like this where people are sort of looking for answers, I think it's just sometimes important to take a step back and sort of look at the longer perspective, which is that if you bought Bitcoin in 2017, even if you bought it at the top and you haven't done anything with it, you're essentially at 50%, over that time period. So, again, I think, in periods of volatility and people sort of get excited about the Fed and how much, money has been pumped into the system. At the end of the day, inflationary dynamics are incredibly bullish for crypto. And, the Fed is going to have to, really take a long, hard think about how aggressive they're going to want to be, when they have the largest demographic of people about to retire. Do they really want to crush people's 401ks? Do they really want to be aggressively raising rates when growth, in fact, is slowing? And if you look at CPI today, it looks like inflation has started to slow a bit. So it'll certainly be interesting to see what the dynamics look like over the next sort of month or two.
Yeah, that might make a nice transition into spot a little bit, just speaking about inflation, the fact that it'll be inflation resistant. You guys gave a pretty open door to the potential of spot on Elastic Swap, which is really interesting, I think, to everyone here on this call. So I'm glad you shared that little nugget. But I think if we scrolled through the questions, Evan and Brandon, if there were any of those, because these are general questions, just whether it be on what's going to make spot resilient against a coordinated attack to depeg it, or folks asking about general sentiment on the market, and then general sentiment or progress on spot. Pick your poison, guys, if you wanted to give any updates there.
Sure. Yeah. So to piggyback on what Dan and Loki were saying just recently about regulation, I think as builders, the best thing you can do is just to concentrate on continuing to operate as a good actor, and then with best interests of everyone involved, and then not get too distracted about hypotheticals that may or may not happen. As long as you're doing something innovative that has value, then I think that means that you're on the right track. In terms of the general sentiment around stables, I think, Evan, I'm sure you have thoughts on this too, but my sense is right now that there's a lot more attention on it than there used to be. And so that's generally a good thing. I think people are starting to see the value of systems that can solve some of these problems in various ways, if they can be done. And it's gotten a lot of people to think very, very clearly, or more clearly, about the risks involved in these systems and what that might mean, how they might play out. So I think it's never good to see movements in the market so drastically in one direction, downward like this. But hopefully they can renew interest in the space, and get people focused more on the right track. I think that's maybe the best thing I can say.
Yeah, I think two things that we look at in terms of kind of fault tolerance as we're thinking about spot going into the spot retreat are kind of, responsible circulating supply, right? So I think one of the mistakes that UST made was just kind of putting way too much UST out there in circulation, just thinking about, the amount of burning that needs to happen to get it back down to parity. That's a big deal. I mean, the same kind of system, if they had 2 billion in reserve and 500 million circulating, would be a different picture. But then the second thing that we look at is kind of like, how can we design a system that handles a range of scenarios, including a failure scenario, gracefully. There isn't going to be a perfect stablecoin design that's completely decentralized, but there can be designs with really well understood tolerance, and that's one of the perspectives that we'll be carrying through with Spot.
Yeah, I think the perspective that a lot of people on the team have is that it's very likely impossible to build a zero risk stablecoin, because you can't just magically remove volatility from a system. It has to go somewhere. And usually that means translated into risk in some fashion. And so I think a good way to look at some of these systems is like, where does that risk go? Who holds that risk, and how are they compensated for holding that risk? And so looking at it from that perspective, if there's always going to be risk involved, then the system will always have the potential to degrade. What does it mean for that to degrade? Like, does it degrade gracefully and predictably? Ideally, that's the case.
Totally. I mean, you can imagine a very extreme design that has like a 1000x collateralization. Is that completely risk-free? No, I mean, something could fall that badly, but it's significantly less risky than something that's like 1x collateralized. And obviously, there's the trade-off of capital efficiency, and kind of the design of these systems has to exist in that balanced space. And I think we're going to be pretty cautious to begin with. I mean, we've been watching this space for a long time. We've been very skeptical of a lot of the existing designs that, even today are out there, and are only now kind of proving themselves to not work and encoding themselves in kind of our collective, more recent crypto Twitter memory. But yeah, these are all really important and interesting questions. And hopefully we'll have more to share after kind of the spot retreat.
Yeah. So
speaking of that, one was asking about the progress of the spot project. So next week, the core dev team is planning to go on a work retreat. So if you don't see us online for a week or so, that's why we're all going to be focused heads down on trying to finalize as many of the remaining open threads as possible. And we do have code audits scheduled. So that's one of the oftentimes the biggest question marks around scheduling. So that's a great question.
Yeah, that's awesome. I was going to say that one thing that Evan just said could lead actually a nice segue into the origin story. Do you want to just take a minute and share about sort of how Fragments originated and kind of the core mission there, what you're saying about the trade-off component, and some of the realizations into what we have now, I think is a pretty cool tale.
Sure. I mean, like Brandon and I originally raised to develop a decentralized stablecoin back in 2018. It was something, just like today that, people could get easily excited about because, at the time, I think people were, again, asking a lot of questions about Tether and Basis, not Basis Cash, the original Basis. Nodder had raised like $150 million, which was astronomical at that time, to bootstrap, a 2-token system. And I think we pushed that design about as far as we could. And I think we quickly came to the conclusion that it would only be durable if, over time, the number just kind of demand just always went up. And so I think we were just at a crossroads, and we concluded, jump in, Brandon, if I'm misspeaking, but I think we both concluded that we wanted to build something durable, something as similar to Bitcoin as possible that could take on some of the functionality of stablecoins without the fragility of bond-based systems. So we abandoned kind of this reserve-based approach, and we were left with AMPL, which, is able to transfer the volatility of demand from price to the number of units across a wide range of market conditions. And that would, and really just the thing that made it simple was thinking like, okay, imagine Bitcoin was designed this way, that it's as volatile as it currently is, except for, each Bitcoin is always worth $1, and it's the number of units in your wallet that goes up and down instead of the price per unit. And I think it was easy to see that that would be strictly better. And that would allow you to start to use Bitcoin to build basic contracts like debt contracts, maybe derivatives. And so, with that, we kind of pushed forward with the AMPL design and started thinking a lot more about what that might look like in a marketplace. And as you can see now, we're kind of using it as a building block for much more than that.
Yeah, I think that's pretty accurate. Yeah, I wonder if we should maybe publish that old fragments paper sometimes, because I think might be interesting as a historical document, if nothing else. But yeah, the original fragments protocol had like three main components. One was rebase, one was a fractional reserve, and then one was bonds. And then yeah, we kind of lost all confidence in everything except for the rebase. So we took those out. I think we still have photos of the whiteboard where we derived how much growth would be required to sustain the bond type architecture. I think I tweeted out at one point, but we still got this somewhere. But now with the spot, this is sort of a sort of return to the original idea that we initially were trying to solve. So now we think that this is a design that is worth building. And so we're really excited to be able to do that now using all of the work that we've already done on AMPL as a block.
Yeah, you might have seen that Satoshi quote circulating. It was one of the last messages that he ever sent, and it was along the lines of, if there was a way to build something like AMPL instead of Bitcoin, they would have preferred to do it, but there was no technology possible to do that at that time. And that's sort of what the origin story of fragments into AMPL is to me. Without the components that you've built and without the space moving along, it might not have been possible to build until now. So it's a pretty exciting time to be here. And then speaking about origin stories, GS won a hackathon, the Chainlink hackathon, and there's a question that links here to it, which is maybe there's a better way you guys answer it, Evan and Brandon, but Ziri asked, any updates on the fourth DAO and the upcoming plans to use the treasury without having to sell the token? And I would just say, I'd suggest that one possibility would be what GS's project is working on. Might be one of the ways to solve that issue.
Yeah, I think definitely. I think there's two fundamental problems that every DAO treasury has to deal with. One is diversification, and then two is how do you use your capital productively without putting downward pressure on the asset itself. And so I think what GS and Hourglass team are building is a way to solve that second problem, which I think is super exciting, not just for us, but potentially other projects as well.
That's right. And then, yeah, I'm not seeing too many other questions plow through, but it's kind of nice to be a small part of the Elastic Swap origin story, no matter how small. We're, I think, really proud to be a launch partner on two platforms, and then really thankful that you guys have built this platform, which is some tech that we needed, and then all the other rebasing Elastic Supply tokens needed as well. So, yeah, that is really great.
Well, we're really happy too, and I also want to just say you're a larger part of the origin story than you think you are, because we only started talking a few months ago. But back in 2020, when we were looking at developing the product, which ultimately led to us developing Elastic Swap, we took inspiration from Ampleforth and the rebasing dynamic to design our rebasing governance token. So had you not decided to do that, I'm not sure we would have decided to do Elastic DAO, and I don't think we would have ultimately landed on the need for Elastic Swap. So it really is interesting how all of these threads come together, and I think it's very fair to say we would not be here if you guys had not decided to go and form Fragment and make the choices that you made early on.
Yeah, that's
awesome to hear.
Really cool. Definitely. Bing Bang Wahoo asked, AMPL is chain agnostic, right? Have you guys ever looked at the possibility of developing on ICP? Kind of like Dan said earlier, this idea and what you just said, Dan, we want to play well and play nice with others. You can see some pieces that Brandon and Evan wrote in the past about kind of our goal of being chain agnostic. We want to be this decentralized unit of account for the crypto world, and obviously Spot, we'd like that to be wildly successful as well and be chain agnostic. So the short answer is yes, AMPL is chain agnostic, and will it be on ICP? I guess the answer is where does it need to be? When does it need to be there? And how much demand to be there? And then what can we do with AMPL or Spot when it is there? Brandon, do you have a better way to put that?
Yeah, I would say that being, multi-chain or cross-chain has always been part of the core DNA of the project. And it's still something that we think about, but I don't think it's the highest priority right now, just for various engineering reasons more than anything else. Like if there was perfect bridge infrastructure today that we could rely on that was decentralized and trustworthy, then maybe it would become more important. But right now, I think, it's still an open platform, so anyone could bridge AMPL to any chain if they wanted to without requiring permission, in the same way that people can bridge Bitcoin to Ethereum. But it's not taking up most of our day-to-day thoughts right now, because we think that, if we can effectively create spot, then it's much easier to bring spot everywhere than bring AMPL everywhere first. So if we can build spot and get spot everywhere, then maybe AMPL could follow if there was a desire to.
Yeah.
Well, I'll tease one thing that we have on our roadmap through a bridging partner of ours. We are looking at creating, as we go to other chains, cross-chain liquidity, not just multi-chain swaps. So I think we may even cause AMPL to wind up being on multiple chains relatively in the relatively near term, call it the next year or so, if current very rudimentary plans work out.
And that would be absolutely amazing. So, the other hard part about expanding onto other ecosystems is getting a usable footprint within those ecosystems in things like liquidity pools and lending platforms. So that would be amazing to see.
Yeah, we definitely welcome it.
Well, conversation to be continued.
Awesome. If anybody has anything else, I think we're probably good to wrap. I'd love to give you guys the last word. All I can do is say it's been awesome being a launch partner with you guys at Elastic Swap. I would definitely encourage everyone to check out your website, to check you guys out on Twitter, and join the Discord. The Discord's been really welcoming. It can bring you up to speed really quickly. Anything you want to leave people with, Dan or Loki?
Yeah, I'm just going to say, you may see this in Twitter. Maybe you haven't. Maybe this is your first down cycle. Maybe it's not. But, everybody here who's talking, we've watched multiple down cycles and up cycles. And it's a little bit of a joke at this point. But the teams that you can count on are the ones that keep building regardless of what the market is doing, and the ones that keep looking at what's next. And we're really proud to be partnered with Ampleforth, because we know that they are one of those teams, and certainly they saw that in us. We have a track record of that too. So don't worry too much about what's happening right now. Just get into building if you want to see what you can do, and otherwise keep supporting the projects that you really support, because we will be here regardless of what's happening in the market today or tomorrow or in 12 months.
Yeah, that's awesome. I think that's a wrap then, guys. Definitely, if you want to continue conversation, go for it, and you can hop over to the Elastic Swap Discord to do the same. So thanks everybody for joining, unless anyone has anything else. Cool. Have a good rest of the day.
All right. Thanks, everyone.
Thanks, everyone. Stay safe.